con Jerome Powell y Bernanke hablando en una mesa redonda. Recuerden, Bernanke, exsecretario de la Reserva Federal, expresidente de la Reserva Federal, quien estuvo en el poder de la Fed cuando ocurrió la gran crisis financiera en 2008, quien de hecho inventó los QE, los Quantitative Easing, y quien llenó a las bolsas de liquidez para acabar con la crisis financiera. Veremos qué dicen, vamos a ir directamente ahí para escuchar.
To be part of it. And let me add my thanks to those of us who made all of this happen here today. So I first met Tomas when I joined the board as a governor in May 2012, almost exactly 11 years ago. And in preparing to join the board, and then in my early years at the board, I was very focused on developing, a deeper background in macroeconomics and monetary policy. Many people here at the board supported me in that process. Too many to name here, but I will say Tomas really stood out. And it was during the process of reading, the literature and discussing it that I really started to get to know him. He had this great ability to communicate complicated ideas. He obviously loved talking about economics, and his great enthusiasm and willingness to engage with me, a new governor, was immediately evident. He was very gracious to me, and we had a lot of informative discussions. So rather than being his teacher, I was really his student in those early years.
Bueno, pues por ahora nada importante, nada más se están introduciendo, está Jerome Powell introduciendo también sus inicios dentro de la política monetaria, de sus estudios, y también lo que agradece al otro invitado, a Bernanke, por todo lo que ha aprendido de él. Por ahora simplemente dando agradecimientos y hablando sobre la historia de Jerome Powell entrando en este mundo de la política monetaria. Todavía no se ha comentado nada a nivel actual. Vamos a seguir escuchando.
Organizing the staff all through the Federal Reserve System. He also played an absolutely essential role during the critical period of the pandemic at the very beginning, when we were marshaling our forces and our tools to stabilize the financial system and protect the economy from even more dire consequences. And through it all, he did come through as, not just for his dedication, his great intellect, and his mastery of monetary economics, but also just for his kindness as a human being, and just as in being a terrific, great colleague and a great person.
Thank you. I think there's a lot of agreement for the sentiments that both of you have expressed. Appreciate that. Before we get to some questions on some current issues, I did want to ask you both about any formative experiences that you may have had that have shaped your views, particularly about your thinking about monetary policy. Paul Volcker, in his oral history...
Arranca ya la primera pregunta en esta mesa redonda entre Bernanke, el exsecretario de la Reserva Federal, y Thomas Powell, el actual presidente de la Reserva Federal, por Thomas Lovach. La primera pregunta es ¿qué experiencia les ha hecho aprender sobre política monetaria, alguna experiencia grande que hayan vivido y que les haya hecho tener algún aprendizaje importante sobre la política monetaria? Vamos a escuchar las respuestas.
So Jay, do you have any such stories to tell?
Maybe not quite that on point, but so I graduated from college in 1975 during what we now call the Great Inflation, and same college year as Ben. And I started working as a lawyer in the financial sector in the late 1970s. I recall from that time a growing sense that high inflation was essentially a permanent part of the landscape, just something that we all had to accept and deal with, and that the costs of getting rid of it were too high. So you just were getting used to it. Of course, ultimately the Fed did step up and restore price stability, and one lesson from that era is that price stability is really the foundation of a strong economy, and that the economy doesn't work for anyone without price stability. Another is that high inflation when we have high inflation, it is the responsibility and the obligation of the central bank to restore and sustain price stability. So today, while inflation isn't as high as it was when I was in college, it's nonetheless far above our 2% objective, and many people are currently experiencing high inflation for the first time in their lives. It's not a headline to say that they really don't like it. So we are very aware that high inflation imposes significant hardship as it reduces purchasing power, especially for those who are at the margins of the economy and living paycheck to paycheck and need to use all of their incoming income to pay for food, housing, and transportation and other essentials. And that's why the committee is so strongly committed to returning to our 2% goal. We think that failure to get inflation down would not only prolong the pain, but also increase, ultimately, the social costs of getting back to price stability, causing even greater harm to families and businesses. And we aim to avoid that by remaining steadfast in pursuit of our goals.
Thank you. Dan.
Bueno, recuerden que la primera pregunta es sobre hechos históricos que han vivido que les han hecho aprender una lección. Jerome Powell, qué curioso. Habla de cuando se gradúa en 1975. Echemos para atrás, cojamos la historia y vemos que 1975 fue un entorno de muy alta inflación, donde los errores de Arthur Burns hicieron que la inflación continuase alta, no bajase y luego tuviese que llegar Paul Volcker a generar una recesión para que así la inflación bajase. Dice que eso le enseñó, porque en el momento en el que se graduó, dice Jerome Powell, yo lo que aprendí es que tenía que convivir con una alta inflación, que el coste de acabar con la inflación era más alto que convivir con una alta inflación, por lo que nos acostumbramos. Pero luego me di cuenta que en realidad la política monetaria sí podía ayudar contra la inflación, y lo vio con Paul Volcker, quien consiguió reducir esa alta inflación en los Estados Unidos. Dice que hoy, haciendo referencia al día actual, dice, hoy para algunas personas por primera vez están experimentando con estos altos precios y por eso estamos tan comprometidos con llegar al 2%. Ha recalcado Powell ese objetivo del 2%, dice, si no llegamos, el daño será mayor. Vamos a escuchar ahora a Bernanke sobre sus aprendizajes.
And in 1928, people were dancing to Charleston, and in 1933, they were in bread lines. And that really impressed on me, that economics can make really big difference in people's lives. And monetary policy is like that. I mean, it's, as Jay, of course, and all of you well know, that the decisions made in this building have a very broad and real effect on people's lives. And for that reason, besides its intellectual fascination, it's worth studying and understanding.
Yeah. Thank you. I know that's certainly a key motivation for many people in this room to be working so hard. Okay, let's now turn to some topics of more current interest. And I'd like to start with the nexus between the financial system and the macroeconomy. Both of you, during your tenures as chair, have faced very significant historic financial crises. Ben, obviously you confronted the global financial crisis, and Jay, the global pandemic. Those episodes were clearly acute, very vivid examples of the connections between the macroeconomy and the financial system, as well as, I think, a good illustration of the role of central banks in such episodes. But Ben, your research, importantly, and the research that you have inspired, has really demonstrated that understanding the connections between the financial sector, credit markets, and banks and the real economy is critical for even understanding traditional business cycles. So with that as background, we have just experienced a period of stress in certain parts of the banking system here in the United States. So I want to get your take.
Bueno, pues ahora les están preguntando a Ben Bernanke y Jerome Powell, como ambos han vivido una crisis financiera, Jerome Powell con el caso de la pandemia y Ben Bernanke con la gran crisis financiera de 2008. Les preguntan sobre la relación entre el sistema financiero y la macroeconomía. Vamos a escuchar.
In the paper, so please don't misinterpret this, but it was a classic situation where they had assets that were subject to risk, and in particular, as interest rates rose, the value of their long-term assets fell and their capital fell. They had hoped to hedge that by their deposit franchise, where as interest rates rose and interest rates moved more slowly on deposits, that would partially compensate, but they were dealing with customers who were very social media savvy, and that didn't really work. So after the decline in capital, you had the second stage, which is runs, people taking out their money, which ultimately led to the collapse of the bank, despite, I may add, the good efforts of the Fed and the FDIC to provide liquidity and provide support for depositors. The third stage of a banking crisis is contagion, and people looked at other banks and said, oh, they look sort of vaguely like Silicon Valley Bank. They got the same number of letters in their name and all kinds of things like that, and that caused people to begin to remove deposits elsewhere. And finally, the reason this is important is that it ultimately affects credit conditions. And the Federal Reserve is, of course, looking at the effects of bank problems and other financial issues on the extension of credit and therefore on the real economy. So, you know, in that respect, I think it's very similar to other crises. I think it's different from the global financial crisis in many ways, including its scale and scope, of course. But I would mention a couple of things, a couple of important differences. One is that the impaired asset in this case was U.S. Treasuries, which are very different assets in kind from subprime mortgages, in that U.S. Treasuries can always be valued accurately, and so there's not the uncertainty that was associated with subprime mortgages. And secondly, as the economy declines, if it does decline, U.S. Treasuries actually become more valuable rather than less valuable, and so there's kind of a counter-cyclical effect. So that's one very important difference, I think. And then the other worth mentioning, but very important, is that relative to, say, the GFC or the Great Depression, overall, borrowers are in much better shape, you know, than they were in these previous episodes. And that makes a big difference, both in terms of the stability of the banks and also in terms of the impact on consumer spending and the economy in general.
Well, I guess a major reason that situation didn't get worse.
Bueno, pues Bernanke explica la situación del sistema financiero con la macroeconomía, lo hace poniendo el ejemplo de lo que ha ocurrido con la crisis bancaria actual, con la crisis bancaria regional en los Estados Unidos. Dice que hay tres problemas principales que han ocurrido en la banca regional. Lo primero, problemas de capital, como por ejemplo Silicon Valley Bank. Lo segundo, eso fuerza salida de depósitos porque fuerza un miedo general dentro de los clientes. Y tercero, se fuerza el contagio también. Eso sí, Bernanke, que fue quien, recuerden, estaba al mando de la Reserva Federal en 2008 y la solucionó tirando prácticamente dinero de los helicópteros, por eso se le llamaba Ben el helicóptero, porque básicamente lo que decía era que había que estimular la economía, de hecho es quien lo hizo, ayudando y dando liquidez a los mercados. Difiere de la crisis de 2008, dice que no es igual que ahora, debido a que el activo que ha sufrido actualmente son los bonos del Tesoro, no los hipotecarios subprime, que esos eran mucho más peligrosos y de peor calidad. Y dice que también a medida que la economía cae, incluso estos activos se benefician. Así que no es igual que 2008, dice Bernanke. Vamos a escuchar a Jerome Powell.
Regulatory tools to address financial stability issues. But I see an important distinction between separation, this is the separation principle, separation and independence. Our tools can have separate objectives, but their effects are often not entirely independent. So the tools are complementary almost all of the time because financial and macroeconomic stability are so deeply intertwined. In fact, our consensus statement notes that sustainably achieving maximum employment and price stability depends on a stable financial system. So because they're so intertwined, to me, there is not likely to be an absolute and complete separation of the tools, nor is that possible or desirable. And I think as Ben's research and the global financial crisis demonstrated, financial stability affects macroeconomic stability and vice versa. We saw that clearly at the outset of the pandemic. As a result, the tools that we use to address concerns in either arena can and will affect both, especially during extreme circumstances. That said, yes, the tools are separate, they have individual purposes, and most of the time each can be used for its intended purpose without compromising the other. For example, as you pointed out, when banking stresses emerged in early March, we used our liquidity tools, discount window and the Bank Term Funding Program, to make liquidity available to banks that might need it. And that liquidity supported the stability of the financial system without restricting the use of our monetary policy tools to promote price stability. While the financial stability tools help to calm conditions in the banking sector, developments there, on the other hand, are contributing to tighter credit conditions and are likely to weigh on economic growth, hiring, and inflation. So as a result, our policy rate may not need to rise as much as it would have otherwise to achieve our goals. Of course, the extent of that is highly uncertain. So.
Okay, thank you. And of course, that I think the effectiveness of those tools is reflected in the fact that the
Bueno, nada muy relevante todavía. Jerome Powell estaba hablando de por qué las herramientas que utilizan pueden ser diferentes tanto para abordar un problema o por otro. Lo que ha dejado claro y ha recalcado, y es importante, es que algunas herramientas en los extremos, dicen situaciones extremas, las herramientas que utilizamos pueden impactar también en el sistema financiero. Por mucho que lo que busquemos sea la estabilidad de precios y reducir la inflación, pues igualmente nuestras herramientas en niveles extremos, por ejemplo, subir los tipos a unos niveles muy altos con respecto a lo que estaban hace unos años, eso puede forzar derivadas o puede forzar consecuencias en el mercado financiero, que es un poco lo que ha pasado. Luego justifica un poco la ayuda también que en marzo, recuerden, dio la Reserva Federal cuando salió a ayudar a los bancos, dio ese plan BTFP para dar liquidez a la banca. Dice que eso no interfiere con sus actividades de política monetaria. Bueno, hay bastantes analistas que no opinan lo mismo y bastantes economistas que han dicho que, por supuesto, no puedes tener una política restrictiva mientras a la par brindas liquidez sin ningún tipo de restricción a los bancos. Pero Jerome Powell dice que sí, que por un lado pueden dar liquidez a los bancos y por el otro pueden luchar contra la inflación. Vamos a seguir escuchando.
As Yogi Berra is thought to have said, Ben, you're the baseball expert, you can confirm or deny this, but it is difficult to make predictions, especially about the future. So I think that the best we can do at this stage is probably to just identify the factors that we think can lead to further negative supply shocks. I will say that, though, that positive supply shocks related to globalization largely probably contributed significantly to the period of low inflation that either ended or was interrupted by the onset of the pandemic. And I'm thinking there of the vast increase in global labor supply, the development of efficient global supply chains, facilitated by technological advances and things like that. And I would say those positive supply shocks do not seem likely to be repeated. At the same time, the drivers of the current inflationary surge certainly included a sequence of large negative supply shocks to the global supply chain for goods, which also experienced a large and persistent shift in demand from services to goods, and also the supply of workers. On top of that, Russia's war against Ukraine brought further shocks to global supply chains, particularly supplies of energy and non-energy commodities. So we can't know how persistent those shocks will be or whether further negative supply shocks will come along. Will globalization be partially or fully halted or reversed? Will it resume again as the pandemic mercifully recedes into memory? We can't really know that now. But for policymakers, the bottom line is that central banks will continue to be responsible for providing price stability, and that will require us to navigate whatever additional supply shocks do occur. So as Tomas and Ben and their co-authors wrote in the inflation targeting book, what a central bank can do is control inflation. And that is true over time, even in the presence of supply shocks, should they come.
Ben, I'd love to hear your views on this.
So unusual events which disrupt.
Bueno, aquí Jerome Powell ha intentado justificar por qué la rebaja que hicieron de subidas de tipos de interés, empezar a hacer subidas de 25 puntos básicos en vez de 50, o por lo menos por ahí lo interpretamos. Dice que los desarrollos que han ocurrido en el sector bancario significan que las tasas de interés, las tasas monetarias, no deberían aumentar tanto para alcanzar los objetivos de la política monetaria. ¿Por qué? Porque si por un lado la banca está sufriendo, eso en sí genera un efecto restrictivo en la economía que hace también que la inflación pueda ceder a la baja. De ahí que ya sabemos que en la reunión de marzo se decidiese subir 25 puntos en vez de 50, cuando vino todo el tema de la banca regional, porque la Fed se apoyaba en que la propia banca iba a restringir el acceso al crédito y eso mismo iba a enfriar a la economía. Aún así, Jerome Powell ha recalcado, los bancos centrales seguirán siendo responsables de lograr los objetivos de política monetaria, de lograr ese objetivo del 2%. Y dice que el Banco Central debe lograr ese 2% independientemente de si hay shocks negativos, si de repente ocurre algo muy negativo pues en la banca, en la cadena de suministros o en cualquier otro lado de la economía. El mandato del Banco Central es volver al 2%. Vamos a seguir escuchando.
This episode going forward, I agree with Jay that we can't predict, what new shocks will come. We've got new technologies out there that might, make big changes in our economy. We've got, green investment, things like that might affect the price and availability of fossil fuels. And so there are many, many things that we can't predict. But I think that broadly speaking that the inflation process has not changed, and it's one aspect of that, which is very good news, is that the Federal Reserve's credibility has helped keep inflation expectations, particularly longer-term inflation expectations, reasonably well anchored, which is always sort of the first step in getting control of inflation.
You mentioned the role of the labor market tightness in the inflation process. I think it's quite striking that right on the eve of the pandemic, the unemployment rate was around 3.5%, a 5-decade low. Yet at the same time, inflation was kind of struggling to get up to 2% on a sustained basis. Here we are in 2023. The unemployment rate is roughly at the same level as it was prior to the pandemic, but of course inflation is far above 2%. So in that context, should we be thinking about the relationship between slack in the labor market and inflation differently? Do we not have the right measures of slack? Is it the problems with understanding what the natural rate of unemployment is? Or is slack really not the key to understanding inflation in the first place?
Bueno, pues ahora les preguntan sobre la tasa de desempleo. Sigue en niveles mínimos con una inflación muy alta. Vamos a ver qué responden sobre el empleo, sobre el mercado laboral.
And the Federal Reserve over time has begun to put more weight on things like the vacancy to unemployment ratio, which seems to give a better signal in a period of change when the labor market matching process is in change than the unemployment rate. So there has been some scrambling of those signals. That being said, it's simply not true that, even in people who understood since the 70s that there's not a simple inverse relationship between inflation and unemployment. In particular, what can break that relationship is supply shocks. And so during the 70s, we didn't particularly have tight labor markets most of the time. We had high inflation, A, because we had oil price shocks, which the Fed did not respond to adequately, B, because inflation expectations were not well anchored, and there was a strong tendency for price increases to feed into wage increases, to feed into price increases. So because of the presence of supply shocks and inflation expectations dynamics, there's no reason why low unemployment and high inflation can't coexist. But the remedies might be, depending on the situation, might be somewhat different.
Jay, how are you thinking about that?
So I'm very much in agreement with that. It's certainly true that we had both before and after the pandemic unemployment very low, close to 3.5%, but that we only had high inflation after the pandemic. Does that mean that our understanding of the relationship between slack and inflation is badly wrong, or that it has changed fundamentally after the pandemic? And my answer would be tentatively no to both of those questions. I think what really is different this time was the series of unexpected and persistent supply shocks that featured in the inflation process. I don't think labor market slack was a particularly important feature of inflation when it first spiked in spring of 2021. By contrast, I do think that labor market slack is likely to be an increasingly important factor in inflation going forward. In particular, inflation in non-housing services is showing signs of real persistence. In this highly diverse sector, labor costs are a high proportion of total costs, and that sector happens to account for more than half of the core PCE index. But all of this, the point is, all of this can be explained, I think, using our standard framework for understanding labor market slack. You could say it this way, that the natural rate of employment probably rose sharply as the pandemic severely disrupted the labor market. And the implication of that would be that an unemployment rate of, say, 4% indicated a much tighter labor market in 2021 than it did in 2018. And as Ben mentioned, of course, after the pandemic, we began looking at much more closely at alternative measures, particularly vacancies, but also quits, which have been signaling even greater tightness than the unemployment rate alone might have thought to signal. I mean, to put some numbers on it, at the end of 2018 and the end of 2021, we had 4% roughly unemployment in both cases. In 2018, the vacancies to unemployment ratio was 1-to-1 essentially. In 2021, it was 2-to-1. And that was a much better indicator, obviously, at that time of the simple standalone unemployment rate. Although, as I mentioned, you could also think of it as the natural rate being highly elevated. The other thing is, it may also be the case that the Phillips curve has steepened, meaning that inflation has returned, at least for now, to being more responsive to changes in the labor market slack. But the Phillips curve was once thought to be fairly steep after flattening. Relationships in the economy, like the Phillips curve, evolve over time. So I would not characterize that as a problem for our understanding of inflation.
Very good, thank you. Maybe
Bueno, pues ahora un poco diciendo de todo y no diciendo nada al mismo tiempo. Hablan sobre el empleo y sobre el mercado laboral. Les preguntan por esa relación. Claro, si la inflación está alta, pero el empleo está en mínimos, la tasa de desempleo está en mínimos históricos, en el 3,4%, recuerden, es el mínimo desde 1960. Habría que remontarse hasta ese año para ver una tasa de desempleo tan baja. Les preguntan, ¿realmente la inflación va a bajar con una tasa de desempleo tan baja? ¿Qué pasa con esa relación de la curva de Phillips? Y Bernanke ha dicho que para él ya no hay una relación inversa entre inflación y desempleo, sobre todo cuando ha sido sometido a shocks tan altos como pueden ser los shocks de la cadena de suministros. Y dice Jerome Powell que efectivamente que al inicio de la inflación el empleo no era tan importante, pero que ahora, ha recalcado, sí que podría ser importante para ver hasta dónde termina manteniéndose la inflación, hasta dónde se siguen desarrollando potenciales shocks inflacionarios. Dice que a partir de aquí la parte del mercado laboral se mantiene muy fuerte y la parte de servicios también. Eso ha recalcado Jerome Powell de la Reserva Federal. Vamos a seguir escuchando.
One of its purposes, the narrow purpose, is to try to align market expectations with the Fed's own thinking. I think that goes back to Alan Greenspan. If you go back to 1994, the first FOMC statement, I mean, since then, the Fed has tried at least to give some indication of what it's thinking and what it sees as the risks to the economy. But beyond that, you mentioned transparency and accountability. This is a powerful institution. It's very important that it be accountable to the Congress and to the public, and the best way to do that is explain what we think, what we're doing, and how we're going to go about that. There's other reasons for communication. One I would talk about is feedback. We're having a conference here. If the Fed puts out the issues that it's concerned about, economists will write articles or tweet and respond to that. Or in the case of the Fed Listens program, maybe it would be more ordinary people who are explaining, how monetary policy affects them. One final thing I would mention is diversity of views. Because the Fed has a consensus culture, and there are very few dissents normally, the outside perception is the Fed is subject to groupthink, which of course is possible, but with people talking about, their own views and explaining why they see the economy as they do, it does, I think, at least to some extent, show that there is a range of opinion on the committee. In terms of tools, I guess I do feel proud about the press conferences, which I introduced 4 times a year after the Summary of Economic Projections, in which Chair Powell has taken to an art form. I think also, just the inflation target, the forecasts that we release, and there's a cultural change, which some people don't like, but I think on net is good, which is, it used to be, if you look back at speeches in the Greenspan era, the president of the Federal Reserve Bank of Minneapolis, would talk about, harvests or something, wouldn't talk very much about the global or national economy. Now you have a lot of people talking about, the different aspects of the Federal Reserve's views, and again, that contributes to both market transparency and also to accountability to the local constituency and to the national constituency.
Jay, you of course have continued to push forward on the communications and transparency fronts. Welcome your thoughts.
I think the broader setting is that transparency is especially important today. Polling data show that many important public and private institutions globally have struggled to retain the public's trust and support in recent years. Now, we're an institution that serves a critical public mission, but to be here and work here is to know that the particulars of what we do and how we do it are not generally top of mind for most people. And on top of that, we have a critical and a rare grant of independence. And all of that, to me, means that we have a special obligation to explain ourselves clearly, what we do, why we do it, to provide transparency to the public and their elected representatives in Congress so that we can earn and deserve their trust and support. And that's a critical task if we are going to sustain our democratic legitimacy through this interesting period. My colleagues and I really take that as a primary and affirmative, proactive obligation and not something we see as a burden or of second-order importance. So in that spirit, to your point, We have followed the example of Chairman Greenspan, beginning in 1994 with the first post-meeting statement, through Ben's, innovations.
Bueno, está hablando aquí Jerome Powell y Ben Bernanke, están hablando sobre la transparencia, la forma de comunicación de la Reserva Federal, nada que esté relacionado actualmente con el tipo de política monetaria, pero recuerdan que la Fed debe mantener los niveles de transparencia, que es clave para ellos, y que, dice Jerome Powell, tenemos una obligación de explicarnos de forma clara. Nosotros, mientras hablan de todo esto, de la transparencia de la Reserva Federal y la forma de comunicar, vamos unos minutos a publicidad, enseguida volvemos para si hay más puntos clave dentro de esta charla entre Ben Bernanke y Jerome Powell.
Credit Mutual Investment Manager, bringing together asset management expertise, ofrece soluciones de gestión activa o pasiva, retorno absoluto con liquidez diaria o ilíquida, largo plazo y gestión alternativa a nuestros clientes, con la experiencia de las 7 entidades de gestión de Credit Mutual Alliance Federal. Credit Mutual Investment Managers, bringing together asset management expertise.
Binance. ¿Qué es eso de Binance?
Binance es una plataforma para comprar y vender criptomonedas. Y puedes operar con cientos de criptomonedas.
Espera, si no sé nada de los NFTs y las criptos.
Tranqui, te ofrece información gratuita con Binance Academy.
Wow. Y si compras con su tarjeta, te devuelven hasta el 8% de tus compras.
Todo lo que necesites del mundo blockchain en una sola app. Descárgala y empieza en el mundo de las criptomonedas con Binance.
Ya sé que los premios no lo son todo, pero cuando veo un espacio lleno de ellos, impresiona. A menudo los premios dicen mucho de una persona. Pasión, compromiso. Siempre que no sea un trofeo cualquiera que algunos exhiben en su despacho. Es difícil encontrar un broker que cumpla con todas sus expectativas. O quizá no tanto. Active Trades, broker online desde 2001.
A ver, papi, ¿cómo que lo tienes clarísimo y que tenemos que invertir ahí?
Pero si no sabes ni reiniciar el router.
Ladrillo, papi, ladrillo.
Si vas a invertir, invierte en algo que puedas tocar. Urbanitae, inversiones inmobiliarias.
¿Tú esto lo has hablado con mamá?
Muy buenas tardes, continuamos con Rolling Stock. Estábamos escuchando esa mesa entre Ben Bernanke, el ex secretario de la Reserva Federal, y el actual Jerome Powell. Están hablando de diferentes cosas: transparencia, comunicación de la Reserva Federal. Recuerden, hasta ahora lo más importante que ha dicho Jerome Powell es que a lo mejor los tipos de interés no tienen que ir tan altos como estimaban debido a la situación bancaria y el efecto restrictivo que han generado. También han hablado de esto, del sistema financiero, de cómo se relaciona con la política monetaria. Y han dicho que, por supuesto, que el objetivo de la Reserva Federal sigue siendo ir a por ese 2%. De hecho, uno de los aprendizajes que compartía Jerome Powell es que él mismo se graduó en un momento en el que la inflación era muy alta y, por supuesto, que se dio cuenta que a partir de aquí el Banco Central en 1975 pudo luchar contra la inflación y, por tanto, los bancos centrales tienen que volver a ese objetivo, a ese 2%. Vamos a seguir escuchando, pero antes, miren el S&P500, que ahora mismo se ha girado, bueno, prácticamente los tres índices. S&P500 menos 0,21, estaba cotizando en positivo. Nasdaq también cayendo un 0,29. Dow Jones cayendo un 0,33. Ha habido noticias por parte del techo de deuda también. Ha adelantado Garrett Graves, miembro de la Cámara de Representantes de los Estados Unidos, que ahora mismo las conversaciones están en pausa sobre el techo de deuda. Así que veremos a ver cómo progresa eso. Y por otro lado, enseguida les contamos algo nuevo de Janet Yellen también, de la Secretaria del Tesoro, pero antes vamos a escuchar a ver qué dice Jerome Powell.
As I noted at the last press conference, that assessment will be an ongoing one as we move ahead, meeting by meeting. Having come this far, we can afford to look at the data and the evolving outlook and make careful assessments.
Thank you. Jay, you mentioned that guidance can be useful at times when the public may expect a very different policy path than policymakers. How do you think about those sorts of situations?
You're right. So recently it has sometimes been the case that markets appear to be pricing in a different rate path than the committee expects will be appropriate. But I would say that that disconnect does not seem to reflect a misunderstanding of our reaction function or a lack of belief that we'll do what's necessary to bring inflation down. Rather, it appears to reflect simply a different forecast, one in which inflation comes down much more quickly than the committee participants think is most likely, perhaps due to a significant downturn. I would say also, so far the data have continued to support the committee's view that bringing inflation down will take some time. Moreover, something we often don't remember to think about is that market prices always reflect both expectations and compensation for risk. And what market participants say in surveys of their expectations is actually closer to the views in the SEP than what is reflected in market pricing. So ultimately, my colleagues and I have our forecasts and market participants have theirs. Our role is not to advocate for our forecast. What we can do is be clear about our expectations for growth, unemployment, and inflation, and the likely implications for policy. As well, we want the public to understand how policy would react if the path of the economy were to differ materially from our expectations. And of course, we do lay out our individual forecasts quarterly.
Ben, what would your takeaways be for the past couple of decades' use of forward guidance as a policy tool?
Well, Charlie Evans and co-authors have made a
qué importante cuando levanta el dedo Jerome Powell y dice moreover y tiene que añadir un apunte más. Ahí es cuando da miedo, cuando los mercados ya se preparan y dicen, ¿qué vas a decir, Powell? Tranquilo, baja el dedo. No sabemos exactamente qué es lo que nos puedes esperar después de esa frase. ¿Qué es lo que ha dicho Jerome Powell? Le han preguntado sobre la política monetaria. Y sobre esta política monetaria, esto a lo mejor es un poco técnico, pero le han preguntado sobre lo que está estimando el mercado. El mercado ahora mismo espera que los tipos de interés bajen en 2023 y que la inflación baje más rápido de lo que la Reserva Federal había pronosticado. Bien, a esto le preguntan a Jerome Powell si realmente es el mercado quien tiene razón o si sus perspectivas económicas, las que ya compartieron en sus últimas reuniones, son las que van a tener razón en el futuro. Bueno, Jerome Powell dice que, por supuesto, el mercado puede estar haciendo una apuesta de que la inflación va a bajar más rápido, a ese 2%, y que puede haber bajadas de tipos de interés también, pero que para ellos eso no será así, que llevará más tiempo llegar a la inflación y que ya lo han recalcado varios miembros, que llevará más tiempo llegar a ese objetivo del 2%. También dice que es curioso porque en el mercado ahora mismo dice la diferencia entre lo que la gente dice y lo que hace. En el mercado están apostando a que va a haber una bajada de tipos de interés, pero también dice que hay un factor influyente en esto y es la compensación por el riesgo. Dice, por mucho que no lo crean, a lo mejor la apuesta les beneficia en cuanto al riesgo que están tomando y beneficio. Pero dice que luego en las encuestas lo que muestra esa misma gente es que están más alineados con la Reserva Federal, en creer que la inflación va a tardar más tiempo en caer y que los tipos, por supuesto, van a tener que mantenerse más tiempo elevados. Eso es lo que ha concluido Jerome Powell. Vamos a escuchar a Bernanke.
Forecast. We tried to do that when I was chair. The dot plot is a compromise, which is not ideal. Other central banks do other things. Sometimes they have collective committee forecasts that are voted on, or they use market rates, or they publish the staff forecast. So there are different ways to go about this. But again, I think that forward guidance is both an instrumental tool, but again, letting people know sort of how the central bank sees the evolving situation, even if there's lots of uncertainty, which you can say normally is part of transparency.
So you highlighted uncertainty as being a key factor in dealing with some of these issues. Obviously, uncertainty is a pervasive feature of monetary policy making and often invokes the so-called risk management approach to making monetary policy. Maybe we can start, Jay, with you on this topic. The FOMC's raised the federal funds rate by 5 percentage points in a little more than a year. That's a very rapid pace by historical standards, as we all know. How do you view those actions in the context of the uncertainties that you and the committee faced about the economic outlook, and how did risk management considerations factor into your decisions?
So I'll start by remembering that Alan Greenspan famously said that pervasive uncertainty was the defining characteristic of the policy landscape. It's worth remembering that he made that comment during what we now think of as the Great Moderation. So that statement has never been more apt than it is today. If you look back, the pandemic, the global shutdown, the historically forceful response and the reopening, all of that had no modern precedent. So it has been a time of historically elevated uncertainty and of unexpected outcomes. No advanced economy had ever faced a shutdown and a reopening, and now all of them would face it at the same time. So no matter what happened, the outcome was going to be unprecedented. So this level of uncertainty posed real challenges for policy and policy communications. On the one hand, we had to be nimble to be able to respond to the evolving situation. On the other hand, we wanted to be as clear as possible about what we were doing, lest we add to uncertainty. So I would say policy certainly has been nimble, consistent with what within our expectations. The data did actually show declining inflation through September of 2021, but then turned decisively against that expectations thereafter. And in response, we accelerated our policy firming, ultimately, as you noted, raising rates by 500 basis points in just over a year. Over this period, we communicated that the object was to reach a stance of policy that is sufficiently restrictive to return inflation to 2% over time. But we also communicated that the level of rates that would ultimately be required was highly uncertain. Now, until very recently, it's been clear that further policy firming would be required. As policy has become more restricted, the risks of doing too much versus doing too little are becoming more balanced, and our policy has adjusted to reflect that fact. So we haven't made any decisions about the extent to which additional policy firming will be appropriate, but given how far we've come, as I noted, we can afford to look at the data and the evolving outlook and make careful assessments.
Ben, when you became a policymaker, you were well versed in sort of the academic literature on decision-making under uncertainty.
Bueno, pues aquí Jerome Powell, de nuevo, en tierra de nadie. Por un lado dice que, bueno, habla de cómo fueron adaptando la política monetaria, que primero fue una política monetaria lenta, porque pensaban que la inflación era transitoria, luego se convirtió en una política monetaria ágil y luego se convirtió en una política monetaria estricta, porque se dieron cuenta de que la inflación era mucho más persistente de lo que realmente ellos creían, se dieron cuenta de ese error. Ahora bien, habla a partir de aquí. A partir de aquí le preguntan, ¿cuál es la tasa terminal? ¿Dónde está el máximo de los tipos de interés? ¿Hasta dónde? ¿Hasta el 6, hasta el 7, hasta el 8, hasta el 20? ¿Dónde está ese máximo, Powell, de los tipos de interés que lleváis diciendo siempre? Un poco más, un poco más, un poco más, un poco más, y no terminamos. Y nos reíamos acuérdense, de Bullard, cuando el año pasado daba esa regla de Taylor y decía que los tipos se tenían que ir al 5,5. Y en ese momento nos reíamos, o parecía algo muy difícil de llegar. Bueno, pues ahora nos estamos dando cuenta que cada vez estamos más cerca. Le preguntan a Jerome Powell por esa tasa final, a lo que dice que el nivel de los tipos todavía es incierto. Lo que sí recalca Jerome Powell es que a medida que el efecto ya es restrictivo, que estamos entrando en un entorno restrictivo y que los tipos ya están en un nivel elevado, a partir de aquí el seguir subiendo lo que va generando es más y más riesgo para la economía y que por eso van reunión a reunión, pero que todavía no han tomado ninguna decisión. De nuevo, se queda en tierra de nadie. Damos ya la bienvenida para comentar todo esto y mucho más a nuestro